First of all, welcome to this National Bank of Fujairah Knowledge Series event. So I'm Ashish Gokhale. I work in the strategic marketing team at National Bank of Fujairah, and I will be your host for this morning. Now, today's event is part of the NBF knowledge sharing efforts to explore the most important trends, challenges, and opportunities, the global investment landscape, and the corporate transition to net zero in the GCC region. The event, first of all, let me thank our partners with whom we are organizing the event today, Refinitiv and LSEG Company. We are also pleased to mention that our partners who are supporting us in this event, Fujairah Environment Authority, Sustainability Excellence, Living Business, and Emirates Nature WWF. So can we have a round of applause for all these partners? So we hope that you will take advantage of today's sessions to interact with our speakers and to network amongst yourselves during the breaks. Now, without much ado from my side, I invite Mr. Rehan Ali, the head of business banking at National Bank of Fujairah, to come over and share his opening thoughts.
Thank you, Ashish. Good morning, everyone, once again. And thank you so much for joining us today to discuss this important topic. NBF has always been at the forefront of ESG and supporting the communities and the social causes. And today's event is one such example of our ongoing efforts. While currently the world is facing numerous challenges at the global and the local level, but we are making definitely an effort to make a contribution toward this important aspect. Today, as we convene, let's utilize the opportunity to address the climate change and how it is affecting our businesses, our ecosystem, and to explore the most important trends which are affecting the landscape and the corporate transition to net zero in the GCC region. As we know, the UAE has taken the responsibility of hosting the COP28, showcasing its commitment to driving change and fostering international cooperation. Hosting this conference is not merely a logistical achievement, but also a testimony of the country to this dedication of sustainability. All with these things, our journey to a sustainable future is not without its challenges. It requires relook at our strategies, investment, policies, and engagement of our societies. As Ashish, my colleague, mentioned, this event is being organized in partnership with Refinitiv, Fujairah Environment Authority, Living Business, Emirates Nature, and Sustainability Excellence. In today's event, we have invited experts to address and share the valuable insights, and we hope today's discussion will provide useful insights. So thank you once again. A big round of applause to all our people who have joined today, and I'll call Ashish once again to take this initiative forward. Thank you.
Thank you, Rehan, for setting up the context for this session. So let's get straight on to the first session. And our first session for the day is covering global and regional economic outlook. And our speaker for this session is Mr. Nikita Pavlov. Hope I got it right. Thank you. He is the EMEA director at Refinitiv. Now, Nikita has multiple years of experience in various countries across the EMEA region at the London Stock Exchange Group, LSEG, now Refinitiv, I guess. He joined a company with an impressive background in economic and financial research. So hope we get some interesting insights from Nikita. Nikita, stage is yours.
Thank you. Indeed, I hope I will give you some insights. I will look into this slide if you don't mind, or maybe I will walk around this scene. So, in front of you, the first slide, the agenda. It won't be boring, I hope. It would be 12 slides, and it was quite complicated because the first deck of slides been prepared 2 weeks ago, before my vacation, school break. And after number of situations such as another hike of the rates, Another highest yield for 10 years debt. Actually, I had to redo this, and that's a pleasure for me because most of the data on the slides would be from yesterday. So I just polished it up. So we will go from global to local as much as we could, and we're gonna operate with macroeconomic conditions. I will not touch geopolitical situations. I will not touch anything what is not actuals or facts. I will only provide what is currently happening on the market and what market players are thinking about our future. And I will leave it to you to understand what the potential circumstances might be from there. So let's start with the first slide. Obviously, we could not speak about the global conditions without proper understanding what's happening across the markets. As you could see, the Nikkei, the Japanese index, stays on the top in terms of return year to date. The country with one of the smallest inflation, and that's actually might be a risk for them, because while other countries are struggling with a high inflation, the Japan has absolutely opposite dynamic. Most of you know that Brent prices during this year have been very volatile. And as of yesterday, it's almost 10% return since the beginning of the year. But most of you might see May and June this year when they were in the red zone. And again, there are a number of reasons why it's happening. And last week on Thursday, the US reported that their domestic storage of the distillators on the historical minimum level, so it's actually pushed oil prices further up. And the 10 years benchmark for the UK and the US on the bottom. Again, there are multiple reasons why that's happening. And one of that is actually the pressure on the debt market, how markets believe or not believe actually in the green or big, better future in terms of the 10-year length. But what I want you to pay attention is actually the next slide. In the beginning of this year, me as well, actually, I said in May that I don't expect any hikes for the US key rate this year anymore, and I was wrong. And that's good that I was wrong, because now we definitely live in an absolutely new environment with the key rates, because now the US key rate is actually on the level of the beginning of 2000s. What does it mean? And I truly believe that history repeats itself. Whatever happened, going to happen again, maybe slightly different, but it's going to be replicated in the future. So such kind of key rate on that level for the United States, it was in the beginning of 2000s, as I said. The EU benchmark, together with the British benchmark, they stays on the highest levels as well. But what I wanted to pay you extra attention is the CPI level. Many economists saying that hiking the key rate is actually one of the instruments to manage your inflation. And when you have a key rate above 5% and your inflation is around 3.5%, is a bit strange, isn't it, right? Because like, why that's such disbalanced? And actually the theoretical answer, again, I do not insist that it's like absolutely true, but from my point of view, it might be the reason why it's happening. You will see on the next slide. Actually, at the same time, in EU and the UK, the CPI rates even higher, and that actually gives a lot of pressure for the currency. And again, we're going to speak a lot about currencies, the macroeconomic conditions today in the world. But again, just to remember these numbers, that US CPI is 3.7, Great Britain 6.1, and at the same time, the US, which put a lot of effort, specifically after pandemic, to decrease unemployment rate, actually now it's climbing back to the January 2022, so like 1.5 years ago, literally right after pandemic. So is it healthy for economy? What does market think about it? What global players are doing about that? We will see on the further slides. So those two slides is really, really the biggest possible future. So on the left-hand side, you see the global GDP growth. And the orange bar here, and I will try to showed there on the left-hand side, those, that's are developed economies. As you could see, there are only 2 times when it was on the negative. It was the crisis of 2008, and this one, I'm sorry guys, who is sitting there, I will show it on that slide, but I believe you understand where I'm trying to put the marker. So that's the pandemic level. What's important on that slide? As I said, the key rate of the United States was on the same level in the beginning of 2000s, right, over there. We might to do it interactive, but we will not. So what I'm trying to show that since 2000s, developed markets in terms of the ratio versus developing markets started to produce or deliver less to the global GDP. And that was very much important for the whole market. Because since that time, we started to learn more about BRICS countries, China and Chinese economy, now India. So that's actually the time of opportunities for a lot of countries in the globe to step further and say, hey guys, we are developing and we are growing much faster. Look, here we go. Invest to me or walk to me, and that's new trading partnership. And if you look at the global trades, it's actually growing across the world, so which is definitely the good time. So what I'm trying to say by that, and here is the forecast until 2028, that's actually the bigger proportion of emerging and developing countries gonna stay way more than developed markets. What does it mean? I will leave that answer to you, but just a quick chain to the previous slide. The key rates of the developed markets are on quite high level, above 5%, and previously we used to say, oh, that's above 5%, maybe that's a high yield debt, or maybe that's emerging markets. Maybe that's the answer. On the right-hand side, there is a global debt. And I do love debt in terms of understanding, because for me it's kind of the trigger or marker what's happening within the economy. So if you look into, let me show it there to be equal for everyone. So if you look from that side, the orange line is the world. What's important there? For the last roughly 15 years, we saw very regular uptick. Then the pandemic started, and all of you remember that COVID debt, COVID bonds, sustainable bonds, all of them came together to make the healthy environment. But what's more important there, that from advanced economies, it started to decline after the first year in pandemic, but emerging markets keep growing. And that's very much important. Just from the bigger picture, again, when you operate in the market and your average yields or average key rate from 0 to 2%, right? It's quite easy for you to go to the market and say, yeah, of course, I'd like to borrow some money. I'd like to come to the market because, okay, what could I pay? 2% coupons? That's okay. And developed markets used to have it as regular instruments to improve their business. Meanwhile, emerging markets, when they had 6, 7, 8, 10%, they got used to use those percentages. And for them, having a key rate at 5%, and for them, it stays on the same level at 10%, it's just business as usual because they did the same in the past. And again, it pushed local currencies, or better say soft currencies, as the main nomination of the debt. And here is the logical question, and since the beginning of the year, I answered at least 50 plus questions about the same. Will the dollar stay as the main reserve currency in the world? Wait a second, Nikita, you just said that more countries, more corporates are going to in other currencies, they are looking for another debt within another currency. Does it mean that dollar will not exist or will lose their position in terms of the global reserve currency? Again, that's the allocation of the whole central banks in the world who disclose their data, obviously. So it's roughly 170 countries, the way they invest. So the last time we saw the decrease, the last time we saw the decrease, what a surprise, level of 2000s. Do you remember that from 2 slides below, right? So that's been decreasing. But again, when we say that dollar used to be at 55% of the global reserves and went down to 30%, but still stays on the top, and now we are coming to the environment that it might be repeated. Again, might be. I'm not saying that it's going to be absolutely copy-pasted, but it might be replicated by the new reality. Actually, yes, we are right. So dollar is not keep growing, but it's not dropping. And it's just more or less flat. And if you look for the like 10 plus years, it's quite heavy, quite complicated to say that dollar will lose their first position as of today. Again, we need to review that slide, and again, for the students where I do the lectures, I'm saying all time the same. You couldn't operate just by one picture. It will not give you any insights. You have to look into this constantly, at least on the monthly basis, to understand what's been changed, what's changed around. But for today's reality, actually, I do not believe that within the 10 years, dollar will lose his first position in terms of the reserve currency. Again, the market, the capitalism, the environment is actually created around dollar. And it's, once again, I don't believe that it will lose his first position within 5-10 years. So what are the challenges? And actually, that was quite maybe the heaviest slide for me to compile, because there are so many of them. But 2023 is a unique year. We started this year with a lot of pressure, and for those of you who operate with airlines, you might remember that everyone, and now Emirates actually even beat up that level, but if I'm not mistaken, only 3 airlines in the world actually made that. So they went even higher than pre-pandemic level in terms of the passengers, but all the rest are not. And problems with Tesla, with their gigafactors, because they were saying, okay, we're going to build trillions of the cars every year, and now they just stuck on their parking lot. And now we see there is like another promotion coming, obviously, because everyone started this year with a very high pressure from investors, from the world, that we have to grow, we have to grow faster, and after pandemic, what else could happen? But 2023 actually brought us a number of things which already happened, and actually one of the biggest challenge for the market is the slowdown of the GDP growth. And recently, the Chinese government even reviewed their GDP overview for this year. They cut it by 1.5%. Again, China, it's debatable, but okay, it's top 2 economies in the world. And if one of top 2 economies saying that, oh, we actually don't think that we're going to reach out the target we established in the beginning of the year, and then the US is keep hiking their key rates, it's actually affect the whole world. The second one, developed market key rates, just briefly touched it, low merger and acquisition deals. And again, let's see in December, but as of today, even in 2008, for those of you who was on financial markets, you might remember that was just a disaster. But even in 2008, year to date, were more M&A deals than this year. Again, let's wait a couple more months just to have the proper calculation. But again, what M&A deals means for the market. When you buy a company, you expect to grow out of it. You will never buy it just because you want to buy, right? You want to do some business, more business, and you think that you will deliver more. And seems like this year a lot of investment bankers in the world, they decided just to step out to analyze what's happening, just to understand what their environment would be, where they could cooperate, where they could not, and shall they increase their geography of presence, for example, or they shall not. And all of that impacted M&A deals, which is like obviously shrunk the jobs. And we saw this year a lot of bankruptcy in the States, for example, in Europe, the deal between Credit Suisse and UBS, all of that is happening not because of enough positive mindset, if I may say. Commodities market, again, and as I said on the first slide, we started the year with really great positive trajectory of the oil prices. And it was like that until end of Q1, then it went down. So the high volatility of silver, of gold, of oil is actually another signal for me that market is trying to look for a hedge to something safer, to something where to invest to, and again, save the money and avoid the high inflation. We're going to speak about this more in a few seconds. And climate-related issues. I have the teammate who reports to me, and he based in Athens, in Greece. And he told me that it was he's 50 years plus old. So, and he said that that was the worst year in his memory in terms of the climate because of the wildfires. And I hope that none of you have been impacted by that. They stayed without enough water even to produce enough olive oil, which is, I believe, most of us use on a daily basis. So, and that's just one example of one country. And we could look further and further and further, and that's actually impacting that. And I'm glad that we're all together today to speak more about ESG and how much that's important. And I was thinking to put here as the picture I did by myself, but I would rather do this on LinkedIn later this week. I was in Sri Lanka last week, as I said, for the school break. And the city name is Viligama. Some of you might know that. That's a very nice place for do the wave surfing. And I just step out from the hotel, like 500 meters, and that was so much dust of plastic and metallic cans, of the plastic bags, all across the sea coast. You couldn't literally see a sand, because it's full of the rubbish. And my daughter asked me, I was like, Daddy, shall we pick it up? I said, look, we're going to spend the months here, but at least let's do something, right? Just pick a few. And she said, why people are doing this? And I said, because many people do not care about the future of them and their kids. Again, maybe that's a very personal example which touches me personally, because again, I saw just a few days ago, you could see my red face, because it was quite hot over there. But ESG agenda is very much important, and it again comes to the market as well, because we see more and more companies stepping into that, but some companies doing that inappropriate, and there is a proper term of doing that, and the name of it is a greenwashing. So someone of you who works with the funds, you might heard that term on the market. But yeah. So, actually, coming to the ESG topic, that's only one thing I wanted to share with you, because now global investors are seriously doubted where to invest, where they could bite or overperform the inflation, where they could work better than the market. And actually, those charts on the bottom, it actually shows the performance. And I remember myself in Kazakhstan in 2014, that was a stock exchange conference. They asked me to cover the climate topic, and I asked the audience, hey guys, I will give you a choice, which company you want to invest. And again, Kazakhstan, right? So oil and gas producer. Would it be the government state oil and gas producer, or that would be a company who is doing recycling? And oil and gas gonna give you guaranteed 7% return, and recycling company, I'm not sure. Guess what? 80% of the audience said oil and gas. Obvious, because they're investors, they want to generate money. And only 20 of them say the recycling company. Guess what? There is a company in Kazakhstan, and they established in 2017, the recycling company. They opened their factory, and now most of the glass in the country done by them. They're not listed, but I'm really glad, and I hope that person was that day in the audience who heard that. And actually, if you look into the performance, right, from the black bars are non-ESG, and the blue bars are ESG. And actually, if you look to the 5-year return, yes, on the right-hand side bar, you will see that from the equity perspective, the ESG-oriented companies deliver more than non-ESG.
So, moving back to equity and fixed income, and again, my background is more about fixed income debt and macroeconomy. If you look into that bar, obviously, in a time of the high rates, actually you could not expect the high return from the debt. But what's important on that slide, that all of those returns being recalculated into one currency. So all of them are even, equal, and we could properly compare apples to apples, and that's the comparison analysis. What surprised me there, that in top performers are equities only. And that's very much important. Again, more and more investors, based on that performance, do not believe in the debt, and they expect better return from the equities. Again, with the previous slide, we've learned that for the 5 years returns, actually ESG-oriented companies, they do even better. Moving next, and that's the unique slide. Again, the data based on July, because it's quite hard to compile the data. The whole passive investors, the whole funds, and their flows, so where they invest to. Again, it's quite complicated data. That's the reason of that lack. I know that we are almost closing October from the calendar perspective, but the data from July. And as you could see, and I want to pay your attention for the black bars, actually now, what happened, right? So that the blue bar on the top, that's money market, October 2022, exactly a year ago, and I will remind you that it was the first time the US increased their rates. And obviously all investors said, oh, seems like the free money, let me go to open the deposit, 1 year deposit, we will invest into there, no risk, no nothing, let's invest into there. Within the last years, and we see that most of the time the black bars were on the below zero, so it's like passive investor funds, they constantly were leaving equities. Money market, we could say that it's just the fact of the key rate hike. And the black bars now appeared after that time. So what does it mean? That some of global passive investors realize that, okay, we put a lot of money into the deposits, fair enough. We see that equity market is already outperforming. We just saw it. So where to invest and what to do? And obviously, from investor perspective, when your key rate is high, and just a bit of economy, right? So when your yield is high, your price is down. So now it's a good time to buy bonds, and we literally see that. For the last 8 months, more and more passive investors started to invest into the funds oriented to the bonds, or directly buying the bonds. What does it mean? I still believe that we wouldn't see even the higher rates within the next 12 months, because markets started to buy fixed income instruments, and that's important because they believe that current price of the debt is real and that's good enough to buy it. Again, that's what that data says. That's the slide I do love the most. Let's speak about UAE. And today I drove by myself to that place, and finally nice weather. Finally, sun is not killing you in the morning. And actually, more and more people started to think the same. And that's the total allocation of the deposits of the locals and foreigners in the UAE. And it's keep growing. And again, that's annual data. So it was the same in the beginning of the 2023. It stays the same. We will update that in January. But I do believe, specifically now, with the current circumstances, with the current macroeconomy policy, with the current environment for doing business in the UAE, that uptrend will stay the same, at least for quite a while. Again, just to repeat myself, we shall not take one picture and just truly believe what we see. We have to constantly reviewing that. But again, since I'm doing that for quite a while, I do believe that it will stay with uptrend. The most important question, what's going to happened with oil price, and all of us know that oil price is very much important for the market. As you could see on that chart, it's actually the historical analysts, historical recommendations versus actual price, which is the orange line. And then I added literally all possible parameters such as minimum, maximum, median, mode, all together to one slide. Let me go to that side of the audience. So what do we see there? That's actually most of the time, historically, the oil prices were close to the mode and median and the maximum level. And if we see there, and I read one of the review that electric cars will kill oil prices or something like that, I was like, okay. And I believe in the morning I discussed it with someone that car by itself, in terms of the engine, it takes less than 1% of oil consumption, but plastic, tires, that's where is the oil. And it doesn't matter what type of electric car you're driving, if your panel is a plastic, which is oil. So from this perspective, most of analysts are agreed with me, and they think that we will stay in the corridor of $75, $90 per barrel until 2027. Right? And there are very optimistic guys who are saying that it's going to be even $130 per barrel, and very pessimistic people who are saying, no, it would be around 60. In the beginning of the year, again, there was a lot of after-pandemic pressure on airlines, on car producers, and even Morgan Stanley actually reviewed their oil consumption forecast, and they said that within 2023, the oil demand will grow by 36%, right? And again, let's see. But seems like since the beginning of the year, their forecast is very much aligned with what we see now, because when we check the production, when we check the consumption, it's literally growing versus the beginning of the year. Depth in the market, and again, please, that's my personal ask, do not put next to each other the oil consumption and vehicles, right? So it's very low correlation over there. But what I'm glad, and again, today we're gonna speak a lot about ESG, and I'm glad to put that slide. Actually, that's the data of the MENA market in terms of the borrowers who were coming to the market saying that we do something sustainable related. And literally most of it were related to the clean transport and energy efficiency. And it's rapidly growing year on year, year on year. And pandemic was not exception. And that's what is great about that. That's many industries during the pandemic, they saw at least a slowage of their performance. But in terms of the number of issues, number of debt, number of bonds issued, actually the ESG related, they will keep growing. And again, as of today, I believe that in 2024, we're going to see even more. And for those of you who is watching Formula One, even they said, we'd like to be carbon neutral. Formula One, right? The guys who is burning the fuel the most, but yeah, that's the reality. And actually, a lot of that is already happening within energy efficiency and the clean transportation. Speaking about the MENA market in terms of the currencies, and I said that I will say a few words about that. Actually, I know more and more companies from India, from China, from CIS, who are coming or entering the market of the UAE and MENA as well, and using those currencies as a proxy to the hard currencies such as dollar, such as euro. And we actually could see that because, again, here in the UAE, the central bank just replicate whatever decision been done by the Fed, and that actually gives great opportunity for those companies and countries who wants to invest into something else, but they want to be sure that their investment is going to be protected, and that's actually what makes MENA market at most as a specific place to use as a proxy and to use that proper in terms of their investments, in terms of their portfolios. And actually, if you check the asset managers, more and more of them are coming to the, for example, the UAE dirham. They coming to the market as a money market investors at the direct investments. I'm not touching the real estate point, which is now literally out of the roof. It's just rocket jump for this year because of, again, many reasons why, but those are investments and they are coming and people feeling that they're safe here or safer than they used to be, and they use the currency as a proxy to the hard currency. Seems like something happened. Sorry if this clicker. Let me go quickly back. Yep, here we are. The last slide I wanted to show you is the currency indexes. Again, keeping in mind that US dollars will stay as the main reserve currency, keeping in mind that inflation in developed countries such as EU is a group of countries and the UK is quite high. Actually, that's the performance of the hard currencies index since the beginning of the year. I'm very sorry for British pounds, but seems like since the change of the prime minister last year, they now doing better, but still staying in negative line. And the euro is actually doing flat, but US dollar as a currency perform even better than in the beginning of the year. Again, why it's important? Because it just complements my words about US dollar as a main reserve currency. And I do believe that altogether, the market measure all instruments are very much correctly. So the main outcome, and we're coming to the last slide, the main outcome for today that there are high rates in the developed markets. But at the same time, emerging and developing countries actually have the biggest proportion in terms of delivering to the world GDP, which is great. There are issues with inflation, and many investors preferred to invest into bonds. At the same time, equity market is growing, and there are more and more investors and people coming to our market, to the MENA market, as investors, as people who are going to live there, and they keen to keep it growing, obviously, selfishly. So overall, 2023 is a very interesting year. I'm really keen to see the end of this year, how we're going to finish from the numbers perspective, from the performance perspective, from the yields perspective. But overall today, we are on the peak points of the whole year when, from my opinion, I wouldn't expect any hike of the US rates. Obviously, there are a number of people, number of institutions, financial institutions, first of all, who are interested to control the inflation, who willing to perform and grow better and faster. And overall, 2023 is a great year for opportunity, and we shall not forget about the sustainable agenda because it's also very much important, and I believe that future of investments lies down next to sustainable agenda. So that's pretty much it from me. Thank you very much. I would stay in the coffee break afterwards in case you want to speak about. Thank you.
Thank you, Nikita. It's always nice when you intersperse your technical insights with your personal anecdotes. So thanks for taking us through the global environment on interest rates, currencies, and kindly segueing it nicely to MENA and sustainability, which kind of takes us very much into our next session. So our next session is going to be all about UAE vision for COP28. So it brings us very close to home and much closer to the agenda of the session today. Now, for this session, I am very pleased to welcome Shireen Habash. She is the Associate Manager, Conservation Outreach, Emirates Nature WWF. Now, she has a very illustrious profile, so I'll take a minute. Shireen holds a BSc in Biology and MSc in Climate Change and has worked with several environmental organizations focusing primarily on environmental education and citizen science. I like this really. She is incredibly passionate about the environment and believes that the only way to live harmoniously with nature is to provide people with the appropriate tools and knowledge. I'm really excited and looking forward to this next session. Shireen, stage is yours.
Thank you very much. So thank you for that lovely introduction. Can you hear me all right? So another thing that I wanted to point out is I've had the privilege of working with various corporations and businesses over the past 10 years. So sort of relaying what's happening in the world and the environmental implications for them. So today, we're going to work on navigating through COP28 and ESG and touch on what some of the implications are for businesses. Okay, so how are we going to do this? I have about 20 minutes. First, I'm going to go over what exactly is COP28. What is UAE's role in it? What kind of climate action is UAE taking? What are some of the implications for your businesses? Just going over what the components of ESG are. We keep talking about ESG, but we haven't really talked about what it means exactly, and of course, how it emerged. And then we'll touch on measuring ESG performance, and then finally, I'll give you a few examples of cases in action. So this year, from November 30th to December 12th, UAE is hosting COP28, and this truly is a global milestone for the country. So what exactly is COP28? So it stands for the 28th Conference of Parties to the United Nations Framework Convention on Climate Change. So you'll often hear this abbreviated as the UNFCCC. And the UNFCCC sort of emerged after the Rio resolution. So that was the first global resolution that recognized that climate change was an issue. And in 2015, during COP21, it was a very, very great achievement globally because all these parties that come together, all these countries that come together, agreed on the Paris Agreement. So I'm sure all of you have heard about the Paris Agreement. And what the Paris Agreement basically says is it takes into account all of the research and all of the findings of the IPCC. So I'm sure you've heard of IPCC, and that's the Intergovernmental Panel on Climate Change. And that emerged well before the UNFCCC. In the late 80s, they realized that climate change was an issue, so they brought together scientists to come together and review all of the research. And what the IPCC has said is that it is imperative to keep global average temperature rise as low as possible. We've already reached about 1.1 degrees of global temperature rise, but what they've said is that it makes sense to keep it down as low as possible. So these policymakers came together and they decided that let's keep it down below 2 degrees and preferably below 1.5 degrees. So that's what the Paris Agreement is about. How do we keep that global temperature rise down? And also, how do we come together to adapt to the effects of climate change that we're already feeling today? So the only way to do that is to reach net zero emissions. So we keep hearing about net zero. What exactly does that mean? And from a corporate perspective or business perspective, you'll hear a lot of terms thrown around, and it's kind of hard to navigate those terms, but keep in mind what net zero is. Net zero basically means that we need to balance our man-made emissions with how much our earth, our oceans, our forests absorb those emissions. So from a business perspective, it essentially means bringing down your emissions to almost zero. Because the fact of the matter is, what we're letting out into the atmosphere is far more than what we have the capability to absorb. Now, in terms of COP28, of course, these themes emerge throughout all of the conference of parties, but they really focus on four cross-cutting themes in order to reach this net zero goal. So one of them is technology and innovation. So there's this recognition that governments, industries, academic institutions need to come together and use more sustainable innovations. And that's one of the ways, well, that is the way to get to that lower global temperature rise. And of course, inclusion. So this year, there's a huge push towards incorporating youth. And the reason for this is there's a realization that globally we have more and more youth than ever before. And they are going to be running our future industries and the way the world operates. But there's also a push on supporting small and medium businesses. We don't have time in this presentation to go over all the details of how emissions work and what the sources are. But at the end of the day, moving into a low-carbon economy is actually very difficult. So there's a whole focus on supporting these small and medium businesses and giving them resources to meet that criteria. Of course, frontline communities. So here in the UAE, we are affected by climate change, very much so. But the fact is we have the resources to adapt to it. We have enough money, we have the infrastructure, but the reality is globally, the countries that are most affected by climate change are the most impacted because they have the least resources. So supporting those frontline communities that are dealing with floods, droughts, and that rely directly on their land is a big focus. And then, of course, finance. So how are we going to pay for all of this? It's definitely a huge undertaking. So coming together and figuring out what different finance mechanisms are required in order to support all of this innovation and inclusion. So UAE holds a unique position in the global dialogue and in terms of climate. So UAE, one of the biggest oil producers in the world, you cannot talk about climate change without talking about fossil fuels. The reality is that the reason we're here today, the reason COP28 exists, climate change is an issue, is because of fossil fuels. So they've played a huge role in helping with the development, helping us get to where we are as humans, as society. But at the end of the day, the reason we have so many greenhouse gas emissions is because of all the energy we need that's required for everything. So as an oil-producing country, and a country that also uses a lot of natural gas, it's very unique because it provides UAE an opportunity to showcase how you can transition from a country that's very dependent on oil to a country that is diversifying its economy and also diversifying how it gets energy. The only issue with this is at COP, it's going to be a challenge to address the pace in which we need to do this. So from a scientific perspective, we need to reach net zero by 2050. We're not close, so we're getting there. But we need to keep those global emissions as low as possible. So that's where COP will come together to try to help other countries move forward. And in terms of the UAE, regionally, so every year countries They come together in COPs to take a stock on what they're doing to achieve climate action. And they do this by providing nationally determined contributions. So the country sort of comes together and says, this is what we're going to do across every sector, and this is how we're going to reduce emissions. The UAE was the first country in the region to put in their nationally determined contributions, and they have the most robust strategy in the region. So we happen to be in a country where they're focusing a lot on it, and considering COP is here this year, there are huge ambitions to actually get a new agreement in place to implement that Paris Agreement. So something to keep in mind, that keep abreast of what's happening at COP, because it will trickle down and affect all businesses and institutions here. So what are the implications for business? Oftentimes when I do sessions with corporates and businesses, I look to them to come and come up with what the implications are, because you know your industry best. But when you think about it, there will be regulatory and policy changes. So COP in particular, the UAE with their ambitions to reduce emissions, will have new regulations in place that businesses will have to adhere to. Potential for carbon pricing. So, right, carbon pricing could mean taxing oil, taxing gas, but what this will do is it'll force industries and businesses to move to more renewable energy solutions. Physical risks. I mean, extreme weather events. We heard about this earlier. In the UAE, we have extreme heat. In Fujairah in particular, there's lots of flooding. So directly, you may be impacted by physical risks. But thinking about your supply chain, where are things made, where are your services rendered, thinking about what's happening in those countries. And oftentimes, as I mentioned, countries that are most impacted by climate change and the impacts of climate change have the least ability to adapt to it. Transition risk. So the business landscape is changing, it's evolving. There's more push to low carbon technologies. There may be more requirements to incorporate that renewable energy into whatever you're doing in your businesses. And of course, market and consumer preference changes. And then reputational risks. And we'll talk a little bit later about how this was a big thing in making businesses and industries sort of evolve into implementing ESG. But reputation is big. People are so aware of what's happening in terms of climate change and the environment. There's a huge shift from a few years ago until now. So several years ago when I used to do programs, there was so much climate science denial. And currently, like a switch, people started saying, okay, we know climate change is happening, what do we do about it? So people are aware, and your reputation could be at risk if you're not adhering to the changes. And I do want to point out, and I'll touch on this later, but from an environmental perspective, it's not only climate change that stakeholders and consumers are concerned about. It's also other factors that are affecting what we call our triple planetary crisis. And that includes pollution, specifically air pollution, and also the impacts on biodiversity. Opportunities. So with every risk, there comes an opportunity. So innovation and technology. We know that all these new innovations are coming out, whether they're technological or sustainable initiatives. So these advances in green technologies are something that businesses can partake in. And of course, more sustainable practices. Market access and diversification. So I don't know if you've heard of a concept called circular economy. But that's become very big. And it's a really good way for businesses to consider their assets and their waste streams and how they can optimize those to reduce costs and also come up with new solutions and new products. Investor relations. So investors are becoming more discerning these days, and they are looking to do impact investing and so forth, and also to make sure that their investments are sustainable in the long run from a business perspective. So if, for instance, they may not want to invest in certain fossil fuel technologies because they know that eventually those are going to be phased out. And small personal anecdote, I remember in 2008, or no, sorry, not 2008, 2018, so not that long ago, I accompanied a friend to a venture capital sort of summit. And, venture capital, obviously, that's its own, entity and focusing on startups. But I remember making a comment and saying, why don't you guys invest in climate funds? Like, I'm sure companies that are working towards climate or climate solutions. And everyone just sort of looked at me and they laughed at me and they were like, there won't be any exits. No one will make any money out of it. And today I'm finding more and more people creating these climate funds. And that was only 5 years ago. So I think that understanding what trends are happening is one of the key focuses that businesses can have. And there's so many resources out there to understand what people are concerned about globally. And environment is always on top. And of course, brand and reputation enhancement. Aside from greenwashing, if you're actually taking tangible actions to reduce your emissions, to reduce pollution, to reduce the amount of impact we have on our ecological systems, then people will be aware of this, and there are consumer preferences for some companies over others. So, what exactly is ESG? So it represents a holistic approach to assessing a corporation's operations and influence beyond just profit maximization for shareholders. So there are 3 central factors in measuring societal and sustainability impact, and that's environmental, social, and governance. So when we think of environmental, as I said, it's not just climate change. It's considering what impact we have on our natural world, on our natural capital. So thinking about it in terms of natural capital is really important for businesses because at the end of the day, everything that we have, everything that we use, comes from our planet. So it can incorporate climate change, all the drivers of climate change, which include deforestation, greenhouse gas emissions through fossil fuel combustion. Other impacts of that include air pollution. What are the impacts on our ecosystem services and biodiversity? So all the aspects of the environment. And then social. So social sort of considers our relationship, the business relationship with employees, with suppliers, with customers, and also with the communities in which these businesses work within. And then there's governance. So governance will consider factors such as leadership, companies' leadership, executive pay, internal controls and audits. So basically how a company runs and how the checks and balances within it. So this is a slide, and forgive me if I'm focusing on one side or another, and I may refer to this one a little bit more. But I wanted to touch on the emergence of ESG. So we keep talking about it. But when exactly did this become mainstream? Because it certainly wasn't mainstream 10 years ago. And understanding how it emerged will give a clear picture of how businesses need to sort of be prepared for further changes. So what you can see here on the bottom is all the different players. It's not a linear process. So this emergence of ESG was not linear. And there's a lot of different entities and players that have been involved with it. So that includes civil society and NGOs, the business and financial sector, and the international community and governments. So looking back at the environmental movement, it actually only really started in the 1960s. And at that time, you know, I should have put it up here, but there was one picture. It wasn't the first picture from outer space, but there was a picture from outer space that really grasped the attention of humanity. And that's when it was the first time we went to space and were able to take photos. Now we're inundated, so we don't care so much. But people looked at Earth and thought, wow, we get everything from this planet. And so a lot of different publications came out exposing pesticide use and the use of DDT and what the impacts were on the environment and on human health. There was another notable publication by an economist, Schumacher, about how the environmental impacts affect our economy. This started in the 1960s, and it was a very small movement at the time. But then in the 1980s, we saw a huge amount of environmental disasters. So this included the Bhopal gas leak. It killed over 10,000 people in India. You had Exxon have an oil spill in Alaska. Shell, which also released a memo saying they knew that climate change was happening. Basically, were dumping, had indiscriminate oil spills in Nigeria from 1958 to the 90s. So a lot of these environmental disasters were happening that were capturing the attention of the global community. And of course, Chernobyl. So Chernobyl nuclear disaster happened, and that actually influenced the investment of nuclear energy down the line. People wanted to avoid it completely because of Chernobyl. So at the same time, all these scandals, these corporate scandals started to come about, and this led to a lot of increased awareness and scrutiny from civil society and NGOs. So Nike, for instance, had a child labor scandal in the 80s, I think it was, or 90s. And then also Nestle had the baby milk scandal. So what they were doing is they were selling formula, baby formula in developing countries, and touting it as healthier than natural breast milk. And people were using dirty water, unsanitized water to create this formula, and babies were dying. So they basically called them the baby killers. So these corporations became answerable. They became answerable to civil society. They became answerable to NGOs. And of course, governments at certain points have to intervene and create more policies and regulations. So this led to the first corporate social responsibility initiatives within businesses to sort of, maybe it started as a PR mechanism, but eventually they realized it was good for business. And then, of course, there were policy shifts around the same time. So 1992, the Rio Resolution led to the UNFCCC. And of course, key publications over the years, including the Brundtland Report and the Stern Review, cemented this requirement. So the Brundtland Report came about in the late 80s. And after all of these scandals and environmental disasters, the UN Secretary General put the former Prime Minister Brundtland from Norway, in charge of coming up with this report. And she had a very strong experience in public health and sort of on scientific issues. So it was the first time sustainable development was defined. That was the first time. And what sustainable development is defined as, it's development that meets our needs today while ensuring that we meet the needs of future generations. So that's also what created a push for ESG. And then, of course, the Stern Review. So that was a report that came out in 2006 in the UK that basically, it's an economist, Stern, basically said that in terms of climate change, the cost of inaction will be higher than the cost of action. So there needs to be investment in reducing these greenhouse gas emissions. So I wanted to give you this overview because the decisions businesses make have a great impact, but it's not just business. Understanding what civil society is doing, what NGOs are doing. NGOs had a huge influence on banking practices as well, because they pushed them to reduce financing to companies that were doing deforestation. So keeping all of this in mind, so measuring ESG performance. So it started off quite simple. It started off, I think, with the global reporting standards back in 1997. And this was a little bit more basic. This slide is to sort of indicate that there are so many reporting frameworks. And industries are the best at knowing exactly what frameworks apply to them. But you can see that there's a number of different ESG reporting frameworks, and of course, a number of climate and nature-related frameworks. So I know that the Task Force on Climate-Related Financial Disclosures was something that banks were really adhering to, but now there's going to be, or a new one has just come out on the Task Force on Nature-Related Financial Disclosures. So there's also a recognition that it's not just climate that's the issue. It's the other aspects of this triple planetary crisis. And that's what you'll see in the future. Now there's going to be a lot of regulation when it comes to emissions, but there will be, in the future, more scrutiny on how you're impacting our ecosystems and also pollution, specifically air pollution. One of the frameworks I just want to point out is the Science-Based Target Initiative. So this is a framework that, from a scientific perspective, we sort of lean towards because it's science-based. So it works towards targets that will achieve that threshold of 1.5 degrees. And it's a whole exercise, but it's aiming towards that net zero. So it's working with businesses to get their emissions to net zero. And they do this by focusing on 3 scopes. So the first scope would be, what are our direct emissions? Do we have machinery that uses fuel? Do we have cars that use fuel? What exactly do we use in terms of direct emissions? Then it goes to scope 2. What are some of our indirect emissions? How much electricity do we use? And then the third scope goes into other indirect emissions, such as our supply chains. So this is something that, from an Emirates Nature perspective, is sort of the gold standard of frameworks when it comes to the environment. So I just wanted to point out a couple cases, and you may have heard of these cases in the past, of 2 larger corporates, larger companies, and how they sort of were in the forefront of ESG. And what sort of steps they took. So one of them is Unilever. And a lot of times we don't consider companies like Unilever as sustainable, fast-moving consumer goods. We use it, we get rid of them, but they actually have done a lot, and it's a really good example. So first of all, in 2010, they implemented the Sustainable Living Plan. And what this was, it's a plan that aims to decouple growth and profitability from environmental impacts. And that term decoupling is a tricky one, because we know that as economies grow, as the global economy grows, the more global greenhouse gas emissions there are. And that's why there's a push to decarbonize, to move into a low carbon economy. Because right now our economies are heavily dependent on fossil fuels. So that's the Sustainable Living Plan. So that will permeate throughout all of their functions. They started working on eco-friendly products. So of course, there's also a push from society to have fewer chemicals, more natural ingredients. So they worked on their ingredients. They also worked on their packaging to make it more recyclable, because as consumers, we may demand that we want to help and we want to recycle, but we need to have the enabling factors to do so. Supply chain management. So they sort of made their supply chain more transparent, and they put more sort of restrictions or asks on their suppliers. And that's something as businesses that we need to keep in mind. We serve other businesses, so they will have their own requirements. And then finally, water and sanitation initiatives. So certain companies or certain products like Lifebuoy and other partnerships, they basically created these initiatives in underserved communities where they would have sanitation, and so that helped with community health projects. So that's an example from Unilever. The other one is Ørsted. So Ørsted is a company, a Danish company, and it used to be Danish oil, natural gas. I don't remember what the name, but it was an oil, gas, and coal company. And it completely divested from oil and gas within 10 years. And it transitioned from fossil fuels to renewables, and now is the largest offshore wind energy company globally. So they have very ambitious carbon reduction targets. Their aim is to reach net zero by 2040. And then finally, stakeholder engagement and transparency. So they're working very closely with their communities and stakeholders to understand what their needs are. So that concludes my session, but I hope you learned something new, and of course, if you have any questions in the break, I'll be happy to answer. Thank you.
Hope you all had a great coffee break and recharged. I think the discussions outside were so engaging that we kind of gave 10 more minutes, so we are back. After the context setting in the morning around the economy and sustainability in UAE, it's time for some engaging discussion. The topic for the panel discussion next is the corporate transition to net zero, where we will look at the actual practical ways in which companies in UAE can implement ESG strategies around reporting and performance and strategy direction. So without any further ado, we have an eminent panel led by a very eminent moderator, Natalie Lindo. Hope I got it right. I'm very fussy about this, sorry. She's an international journalist, again, a very illustrious profile, so I'll take a few seconds. Natalie is an accomplished journalist with over 20 years of experience. She started her career at BBC as a radio and TV reporter in the UK and Ireland. In the UAE, Natalie has covered regional news and hosted business programs for Dubai Eye and has covered news, current affairs, and numerous other shows. I will also like to invite all the other panelists to take their seat and maybe hand over the stage to Natalie to take over the panel and introduce the panelists. Over to you, Natalie.
I am Natalie Lindo, an international journalist, but I am not the star of the show today. This panel is here to give us a bit more insight. We've heard some fantastic presentations this morning, particularly enjoyed some of the things you had to say. But we're going to get stuck into a conversation here, and we are having a discussion, and it's important that you can take as much as you can from this, but also at the end we'll be opening the floor for questions. So if somebody says something that you're like, oh, I must know more about this, please feel free to keep that question till the end. We'll get some mics out to you, and you can ask anything you might want to of the panel. Anyway, without further ado, the stars of the show, not me. Today we have Charles Tangwarara, who's Head of Business Process, ESG and Sustainability at BDO Dubai. Warm welcome, Charles. Thanks for joining us.
Thank you.
And we also have Joanna Pideaux, who's a Sustainable Finance Director at Sustainability Excellence. Joanna, thank you for joining us.
Thank you for the invitation.
And we have Keith Bradley, Global Programmer Lead at Living Business Globally. Thank you for joining us. And Shireen, of course, we've heard from Shireen Habash, is the Associate Manager, Conservation Outreach at Emirates Nature WWF. So we've had some great presentations, and that's what we're about to do now, drill into this conversation and hear a little bit more from these experts about how we can implement some of the things we've talked about. So I think we'll start with the first question, and this is basically, we've talked a little bit with you, Shireen, about what ESG means and how people can implement this, but we want to know kind of on a practical level, what steps can companies in this part of the world take to foster that strong ESG performance? Now, I think, Charles, we'll start with you because you have ESG in your title. It's a very big commitment from your company to say, look, we're investing in this, we're focusing on this, and we see that as a future. So what kind of practical things can we see being done?
Thank you very much. So I'll just outline a few points in terms of how companies can actually kickstart their ESG journey. And if you're looking at the market here, the GCC and also the UAE, companies are at different levels of maturity in terms of ESG. Some haven't started, some have started, some along the way, some are probably at the optimization stage. From what we have seen from the different kind of clients that we have dealt with and interacted with, one of the first important things that has been identified as a key activity to start with before you embark on the ESG journey is what we call the awareness. Bearing in mind that for ESG, it's all about the entity, the organization, the company, and the company is being run by people. And for a start, those people must have the correct understanding of what ESG entails. They must have the first buy-in before you even start. So for most of the clients, the first thing we're doing is let's have an awareness session, starting with those charged with governance, the board members, all the employees. Once that is done, then you have the comfort that we are on the same page to really kickstart the journey. And once, to start the journey, organizations and those charged with governance will then need to identify who is going to be running with that project for ESG. Because it is a journey and it needs someone who needs to be leading from the front. And one of the areas that has also been identified is that you will need to identify someone at executive level or board level who will actually be a sustainability lead for the organization, who can then kickstart the journey, ensure that whatever initiatives that are there can actually be taken forward. And there's a lot of guidance that is there in terms of kickstarting the journey. And one of the things to identify is to establish a baseline, know where you are in terms of ESG. I think we have all come to understand what ESG entails, what does it mean. So for any organization, they will then need to look at those, the E, the S, and the G. What is it that they have? What is it that they don't have? So some kind of gap analysis. So from that gap analysis, you will then be able to prioritize, because you may not be able to fill all the gaps in the short term. Some will need to be prioritized in the medium term, some in the long term. So for a start, that gap analysis is very important to identify what is it, where are we in terms of ESG, some of the activities you probably already are doing. So for example, a company may already be doing employee wellness programs as part of the S. So that's something, a box that they'll actually tick. But in some cases, maybe the executive versus the other ordinary workers, employees, maybe the ratio is not like where it should be. That means it becomes an action point. So that after that gap analysis, then you put up an implementation program together with the milestones, the KPIs, which can then routinely and periodically be monitored.
And Joanna, if I can bring you in here, you offer advisory services to companies. What kind of advice are you giving them about these practical steps?
Thank you for having me here today. Good morning to everyone. So from our perspective, when I've been in a quite long journey from the, transitioning from the investor relations and capital markets to the ESG investing and sustainable finance. So when we speak with corporates and also financial sector, and I would compliment, of course, Charles in the sense that capacity building in ESG is the first and foremost step for all the companies to bring into the action internally. And then when we look at the corporate side or for any kind of the company size, you need to look on the risk opportunities. So, and in that sense, the first step is to look at the materiality. So the materiality means that when it comes to the ESG topics, what is important for the company as itself, and identify these material issues, and based on that, not just to throw the laundry list of the ESG topics, but to tailor what is really important for the company as its own operations, but it also what is important for the company in the supply chain. And then you can move forward to the next steps to build internal capabilities. So I will mimic and complement Charles and look at the business operations and your employees, what kind of the governance you have in place, and to add to your governance the ESG lens, and to improve it over the time, of course, because the ESG journey, it cannot be short or even medium, it's a very long journey. I think for all of us, it's a lifetime journey right now, I would say. It's not a luxury anymore, it's just a must-have. And when we look at the market in the GCC region, we see companies on the different level of maturity as well. And from the advisory side, it's always this first step and the leadership. It's incredibly important to involve leadership team, that we can cascade the ESG awareness and knowledge among all the employees in the company, and to bring it to bring the ESG into life. Actually, it's not it shouldn't be only like compliance, just to tick the box. I think we all passed that stage in the world already, but we always say just take the first step, look what you have in your business, map your material issues, and set up the objectives, KPIs and targets for the short, medium, and the long term.
And Keith, if I can bring you in here, Joanna mentioned it starts from the top, the leadership is key. What kind of advice are you giving, and what kind of support in terms of this practical steps that companies can take?
So, I mean, we work with a lot of companies in the UAE to get them started on their ESG journey. And I very much echo what Charles and Joanna have said in terms of establishing metrics, understanding where you are today, deciding what's important to the organization, setting targets, and especially embedding those targets in your existing governance structure, whatever that is. ESG is not, it is new in one sense, but it's just another leg of your overall, it should just be another leg of your overall corporate strategy. You have a sales strategy, you have a finance strategy, you have an ESG strategy. They all need to come together in a single strategy for the organization that you can then communicate clearly to all of your team, because all of your team need to be involved. This is not something that should be stuck with an ESG department or a CSR department. It's part of your core strategy, which the whole organization should own. I think that's one of the most, to me, that's one of the, when a company gets to the stage where they have their ESG strategy, embedded as part of their overall corporate strategy, that's really where we all need to be.
Hope you're all taking notes on this. This is the gold standard, so free advice there if you want to take that with you back to the office. If we can move on to looking at some of these examples. So we hear a lot about clean energy. We're very familiar with that. But what kind of other high ROI ESG commitments can these companies explore? Now, Shireen, you talked about some of the things that we've seen companies doing, some of the changes, some of the way NGOs are impacting the decision makers. What would you say are good avenues for businesses to be looking at now and perhaps going forward?
So I think, people think when you talk about high ROI investments, you think about things like clean energy. From my perspective, it's investing in employees. Empowering them to use the tools and resources that are available. So for instance, when it comes to ESG, there's the SME Climate Hub that's under the COP presidency, and that's a great tool for people to use. Employees are busy, they have a lot to do, they have a lot on their plate. So investing in their education, their continuing education, hearing them out. So you have that social perspective of hearing what they need and giving them the opportunity to be an advocate for the company, learn what needs to be done, and then come back and sort of help implement those ESG strategies within each and every unit. It isn't something that needs to be siloed into one department, and we're seeing that change dramatically. But we see the change because of the awareness and the education that these employees were given. So from my perspective, first step is hear them out, understand what their needs are, and then work on your employees and building them up.
And Keith, what other options are you suggesting to people? Are they interested, or do they think clean energy, great, we know what we're doing?
I think clean energy has attracted a lot of attention in this region over the last few years. And it's obviously a very visible thing. If you install solar panels on your roof or over your car park or whatever, everyone can see it. It's very tangible and it's very measurable. But actually, typically, in Dubai, for example, installing solar might give you an ROI over 8 years. But if you use water in your operations, potentially treating that water and recycling it could give you an ROI in 1 year, for example. I know of a seafood factory that's located not in Sharjah, and they started recycling water that was being taken out in big tankers as wastewater, and they paid back for that recycling plant in 8 months. So it's not just about energy. Waste is a whole, waste streams. Other companies who've started segregating their waste, measuring their waste, looking at which components of their waste can be recycled, find that they can at least pay for the waste segregation through the sale of some of the more valuable components of that waste. Metals, for example, there's normally value in scrap metals. Some companies here will pay for paper products, waste paper products. So there are ways you can start converting your waste into free money, certainly recover the cost of that waste segregation, and perhaps generate a small revenue stream in addition to your core operations. But I'd also say one of the best investments is in your people. And I think Charles was talking earlier about the importance of engaging your team around this. We worked with another company a couple of years ago, and by getting feedback from their team as to what they could be doing, they're involved in one of the processes they need to do is to cut sheet metal into parts to be manufactured. And one of their staff actually suggested to them, slow down the speed of the cutting machines, and there won't be so much waste. And they did that, and they reduced their waste between 5% and 7%. So a very simple innovation. It's counterintuitive in some ways. You normally want to speed up your machinery, but by slowing the cutting machines down, they were able to reduce their metal waste quite significantly. And again, that was an initiative that came from the staff. So again, the more you engage your teams and look at continuous improvement as part of your process, including ESG in that, can have very significant returns.
You've raised some interesting points, both of you there, and I think at the end it might be something we come back to because we're talking about some of these innovations, some of these changes, and I think there's a real appetite with end users, customers, clients to hear about some of these innovations, and I think that's something that's quite interesting. Hopefully we'll have time, so we'll come back to that because I think you all might have something quite insightful to say on there. But we'll move along for now, and we'll talk about the GCC Exchange Committee's voluntary unified ESG disclosure. Now, I know that sounds like a mouthful, but it is there to try and help you. And what we want to try and look at now is, how can these listed companies use this GCC Exchange voluntary disclosure metrics to improve their ESG performance? So we have the company that's wanting to make these changes. We have this data available. What's the sort of best way that they can put this together? I'll start with you, Joanna, on this. What do you think is a good way that they can make these work for themselves and the company?
I think the GCC metrics are quite a good start for the first-time reporters, for the medium-sized and small-sized companies. Of course, for the large, but large companies, they came along quite good with implementing the metrics, actually. So with the GCC metrics, they are still voluntary, of course, but they do not interfere into local or national metrics. So when we look what is the biggest challenges among, for example, our clients is to find the data, to collect the data, and the quality of data, it's the highest importance right now. So, and to monitor and then evaluate all the ESG data that are collected within the company, actually. So moving forward, when it comes to the, for example, first report, it's to identify all the information that are relevant to the metrics, to build a team, to build also the awareness, who is collecting what within the company, and how it's aligned with the GCC metrics. With GCC metrics, actually, they refer to the SDGs and GRI standards, and they are general. And it's a very good start for all the companies that they would like to take this journey, actually.
And Charles, how are you seeing that companies can utilize? I mean, of course it is voluntary, but how are companies using this themselves?
So if you look at the GCC ESG disclosure matrix or guidance, it's very simple and basic, like Joanna has said. But however, when you look at it, we have the reporting side, which is towards the end or the output. But there is the process that goes through before you goes to the output, and that touches on the performance. When you look at how they have structured it or designed it, it effectively has the objective of improving the business operations. So for example, when you are looking at the metrics, so in summary, it has got 29 metrics, 10 for social, 10 for the environment, and the other 9 for the governance. If you look at how it has been structured, it has got the guidance in terms of what do you look at under environment. You are looking at your greenhouse gas emissions, what is the emission intensity. If you're going to be looking at your energy sources, what percentage is that from the renewable aspect, what percentage is non-renewable. So when you look at all that information, the organization will be able to have a snapshot in terms of where they are in terms of moving towards net zero. But however, what I have observed is in some cases, organizations are concerned about the output. The process that goes in for you to have a quality output, like Joanna has already said, one of the issues is about the quality of the data. So you will not be able to have quality data from the output if you are not concerned about the processes that are actually there. And one of the good things about these GCC ESG disclosure guidances, they have examples on what you can actually put in place. So for example, they're asking, Do you have an environmental management system, whether it's from an ISO perspective? Do you have a human rights policy? Do you have an anti-bribery and corruption policy? These specific examples that when you answer those questions, you will be able to quickly see the gaps. Because at the end of the day, the objective is not to comply. The objective is to improve the processes with the objective of reaching towards net zero. So organizations can actually take advantage of this to improve their processes and also at the end of the day, improve their bottom line. There are a number of controls that are identified in that guidance, which organizations can actually put in place to improve their systems, their processes, introduce new controls that are much more efficient.
And I want to look a little closer at sustainable finance instruments. We heard from Nikita earlier in the first presentation, and he mentioned some of these. One of the questions we have is, what is holding back companies here in the region from seeking more innovative, sustainable finance instruments? Keith, if I could start with you, because you have a background in finance as well, so I think you're well placed to answer this. What is the reticence?
I'm not sure that there's, in fact, I would probably turn the question round and say, what is it that companies can do more of in this region to access sustainable finance or green finance? The reality is all the banks have their own pressures and they're keen to do more sustainable finance and more green finance. And the banks have ESG teams that are focused on developing their green finance and sustainable finance. A lot of the attention so far has been on bonds, in this region particularly, but globally as well. Bonds only work for big companies. But there's a new form of sustainable finance called sustainability-linked finance, which actually, potentially, banks could be doing for any company. What do you need to access sustainability-linked finance? Is a form of finance where the bank links the commercial terms of their relationship with the customer to the customer's ESG performance. So what do you need to access it? Well, you need to have a clear objective. What is it you want to achieve in terms of ESG? How can that be measured? How are you going to measure what you're going to achieve? And you probably need a third party to verify it. The bank will probably ask that you have some form of third party verification of what you're doing. But if you have those three ingredients, then I would highly recommend you go to your bank. If your RM is a bit lost, maybe ask to talk to someone from the ESG team and talk to them about what you're trying to achieve in ESG, the metrics you're going to use to measure it, who's going to validate that, and then ask the bank to propose how they will link the commercial terms. It could be the finance rate they charge. It could be your trade finance commissions. It could even be the amount the bank pays on deposits to you. I mean, that's between you and the bank. But if you come to them with a package of measurable outcomes, they can potentially structure some green finance for you, which could be commercially beneficial.
And Joanna, would you add to that? Do you think this kind of message is trickling down from the likes of banks to other levels of business and companies as well?
I need to be clear because I barely hear you.
I was just saying, would you add to what Keith was saying? Would you say this kind of message, yes, the banks are working towards it, but are you seeing this with other companies? Are you seeing that they're making sure they have these provisions in place?
Yeah, thank you for that. So yeah, sure, I fully agree with what Keith said, just to maybe to expand and complement that. So from we need to remember that there are two perspectives, like bank and the corporate side. And from the banking sector, there's always like a use of proceeds. So what was already by Nikita said, green bonds, sustainable bonds, we have green sukuk as well. And from the sustainability-linked loans and from the borrower perspective, I fully agree that all the targets, KPIs, and targets should be predefined. There are certain areas that we can use beyond the general business operations of the borrower. For example, green buildings, retrofit, green real estate, what I mentioned, waste management, renewables, solar, wind farms, and so on. So there is quite a huge amount of the use and purpose that we can use those funds. But the other thing is very interesting, that there is not only about the green or sustainable or social linked instruments. There is also a part of the blue finance, blue bonds, and biodiversity and nature finance, which I think for Fujairah it's immensely important with the biodiversity, wildlife, environment, and preserve the mountains and the water. So this is another trend that we see. But the question when it comes to what does it holding back the companies, it's of course the macroeconomic reasons, but also a little bit less awareness. What does it actually mean, the sustainable finance, from the corporate perspective, not from the bank, because bank will build their own capabilities, will need to educate their clients, but for the corporate side, it's to understand what are the risks and opportunities, and how through the sustainable finance instruments, the company can enhance its performance. This is what we talked about, what Charles said, and also how the corporate side and also bank side can improve their ESG rating. So, and I think when it comes to the GCC region, there are huge opportunities in sustainable finance, but when we look at the ESG ratings, there is still a gap that needs to be filled on both sides to improve the ESG.
That leads us nicely actually to the next question. We're going to look at how banks can support corporates in achieving those ESG goals and delivering on, as we're here to talk about today, the net zero commitments. Now, Charles, if I can start with you, how do you see the banks playing that supportive role in this drive towards net zero?
Right, okay. So for many organizations, yes, the drive for net zero, I think the noise is everywhere for everyone to hear, but there are two key focus areas or questions that, yes, the message is being sent out loud and clear that net zero is not an option, climate change risk is real. But when you then come to organizations, probably the issues, like they say, everything falls and rises with governance. So the tone at the top, those charged with governance, are they really driving it enough? Fine, if you look at the UAE, so much has been done at government level, but probably the question is that cascaded enough or trickle down to the entities, both listed entities? Yes, at listed entities level, something has been done because of the mandatory sustainability reporting required. But when then look at the family-owned businesses, the private entities, what is happening there? Do we have enough visibility to actually know what is happening? Are people really doing something, or nothing is happening? So for me, I think that's one of the challenges, I think not only just for UAE, but for many countries, that whilst countries have committed a lot in terms of what they want to do, where they want to go in terms of achieving net zero, but do they really have the comfort that things are actually happening within the private sector, outside the listed entities?
And Shireen, you mentioned, and Nikita also, we've heard the term greenwashing. We want to look at solutions that banks can take to help companies that are not just greenwashing. You kind of want to elevate that. So how can banks be there to offer that support?
So, from an environmental organization perspective, we love working with banks. And it's because we recognize that financial institutions have some of the greatest capabilities to drive transformative change regionally and globally. So I think, first of all, start with the bank. Walk the talk. So from a bank perspective, there is awareness. There's lots of awareness, but either it comes from leadership, which is extremely important, and we spoke about that, but banks are huge entities, so trickling that down requires a lot of education and resources, and it boils down to investing in the employees. RMs at this point, relationship managers, should be able to speak to their customers and understand what some of these industry regulations are, know how it affects the bank's reputations, the regulations that the banks need to abide to. So I think having a bank that really incorporates sustainability and has it embedded within all functions is first and foremost, because that way they can pass it on to the customers. And keep in mind, banks work with customers from, several customers from the same industry, and then customers across industries. So they can create great advisory services for their businesses. So when it comes down to it, start at home and then work your way towards your customer base.
And Keith, I see you nodding along with what Shireen's saying. It sounds like simple, straightforward advice. Is that the kind of work that the banks are doing to support companies there?
No, I think they are. I certainly think there's always more that can be done, and I certainly am a passionate believer in needing to make sure the RMs can talk the talk. But it's also being able at the next level, so the RM can start a conversation, but if the customer comes and says, well, okay, I want to take this further, having answers for them. We work with NBF. I know how supportive NBF are of working with their clients to make sure that they have tools at their disposal, that they have access to advice to help them get started on that ESG journey. A great win-win for banks is to look at the customers who are already in the bank's portfolio, who can help, whose products and services are part of the ESG solution, whether it be clean energy or recycling water or doing good things on the social side or advising on the governance side, and then introducing those clients to the other clients who need help. So just creating a dialogue and creating forums like this where customers can actually dialogue with one another and connecting the dots, all very important.
And Joanna, again, you're nodding along. This is an example that you see as something that can really work when the relationship between the banks and the companies is symbiotic. They're driving towards the same destination. What else can you see that could be great for banks to be doing?
I think from the bank perspective, it's first and foremost to settle down or to put into action the sustainable finance framework that interacts between bank and also give the precise overview what the sustainable finance means from the bank and for the company side. And this is what mentioned also Keith about looking at the lending portfolio. What kind of the clients are there, what kind of the sectors, what is the weight between the industries within that, where the ESG lens and sustainable finance lens can come together. And on top of that, banking sector has enhanced like impact investing, blue finance investing, green equity investing. So there are a lot of opportunities and emerging trends that and tools that bank can use to engage more with the clients through the relationship managers and educate clients what kind of the products and financial sustainable finance instruments are available. And but the first and foremost is to look at the current portfolio and investment solutions in the bank and how the sustainable finance lens or layer can be added to the existing bank operations. Just to fully embed the ESG and from the corporate side perspective or corporate client perspective, it's always to engage and to have this open conversation, what have not only risk, but where we can see the benefits and opportunities for corporates.
So we would like to open the floor. If anyone has any questions for the panel, we'll get some microphones out to you. If you just want to raise your hand if you have a question, and you can direct it to one of the panelists in particular, or you can just leave it open and we'll find a way to answer. I will start with my question because it was something we touched on a little earlier, and I think one of the things that we're perhaps seeing change is end users, customers, companies, clients, ultimately, whichever your business is working with, there's a real appetite to hear about your company's ESG commitments. I think people are becoming more aware. Is that something that you're seeing, Shireen?
Oh, definitely. And so one thing that we work on at Emirates Nature is outreach, and that's engaging civil society. And one of the things that we've done is we've been, because youth is a big part of our COP strategy, we've engaged young industry leaders that are working towards sustainability within their industries. And this ranges from sustainable finance to shipping and logistics, waste, and people want hope. They want something to work with. So we keep talking about all the triple planetary crisis. We're pumping emissions into the atmosphere. We're polluting our waters and our air. Okay, what are we doing about it? And for us, we don't know every industry and what they're doing. But like, for instance, with shipping, the decarbonization of shipping is a huge undertaking. And just seeing specific examples of efficiency and optimizing what they're doing, it's quite technical, but I think it's really important for industries to showcase this because, first of all, it gives an idea of where investments are going, and then it also provides that sense of hope that things are happening and how far we need to go.
And Keith, at Living Business, you want to see change, you want to support companies. Are you getting the message from them? They see there's an appetite for this ESG to be public, to be shared, for the innovations to be out there as part of their USP?
I would say that the biggest driver of change is coming from companies' buyers, whether that's multinationals or it's the situation in Europe. I mean, companies that are supplying from here to Europe are under increasing pressure to change. And even within the region, some of the governments in the region are asking suppliers to be more public about their ESG commitments. So I think it is coming. I think it's got some way to go here. I don't think companies in this region in general see so much value in coming out with a big ESG position. And I think there's also a genuine concern among companies. They don't want to be seen as greenwashing here. And companies have been burned in other parts of the world by coming out with very strong commitments. People here don't want to overcommit. So there is almost an innate conservatism among the business community. But that's changing as pressure comes from, as I say, a number of different types of buyers.
So, before we continue, is there anyone that would like to ask a question of the panel? Yep, I can see a gentleman over there. Great, we've got a microphone to you.
Thank you, everyone. Thank you for make our attention to this very important topic. My question is, for example, plastic products. What is the substitute of this one? And then what is the raw material market of the substitute? And for the renewable energies, what is the other than the solar, what is the mode of this and where it's come from?
Yeah, I think I'd like to talk about plastic because it's something I feel quite strongly about. I mean, plastic has got a terrible rap in the world over the last 3 or 4 years, well, maybe a bit longer, but the reality is plastic is also an incredibly useful product. And it's cheap to produce, it's very lightweight, it's very flexible, and it is very hard to replace. Coming to your question, what do we replace it with? It's a very valid question. I think one of the big challenges with plastic is that it's only used once. It is very hard to recycle. But I don't think we should be looking to replace plastic in every single aspect of our lives. What we should be looking to do is to reduce the single-use plastic, and we should be looking to reduce the single use of anything in terms of our own consumption patterns and in terms of recycling. But I don't think there's an easy answer, and I think it's a very valid question you're asking about plastic. There isn't an easy replacement for plastic. And some of the replacements that companies have been working on have a lot of issues with, they create their own issues. So, yeah, I think honestly the challenge for all of us as individuals and as companies, how do we reduce and remove single use? Single use is the problem. I have a plastic Lego set that I had when I was a kid that my kids have played with, and maybe my grandchildren will play with one day. It's great.
No, but you're right. We've all been there with the new straws, and it lasts a few minutes with the heat and the ice here before you need to think about getting another one. So yes, we need fresh solutions. Is there any more?
Can I comment?
Yes,
on
of course, Shireen.
So I agree. It's very hard to replace plastic, specifically in the healthcare industry. And the healthcare industry is notorious for producing a lot of waste, and that in its own has to be sorted within the industry. Plastic is a huge issue, massive issue, a big source of pollution, implications for human health. We have microplastics in our systems, huge implications for biodiversity. I think one thing that is an easy solution for companies is catching those low-hanging fruits. So simple things that you can do within your company, within your home, and that's to eliminate the single-use plastic. So we all go to conferences, we go to offices, and we have plastic bottles everywhere. I see it everywhere, even in environmental organizations. Very easy to replace this. But why do we live in a society where we have to replace it with glass bottles? Why can't we rely on tap water? Obviously, with huge, large events, it's very difficult. Hygiene is an issue. But I think that walking the talk, starting at home, and understanding that we have a lot of practical applications for something like plastic, but it's not. We've changed sort of the landscape of our planet because of it as well. So I just wanted to point that out.
Thank you. Is there any more questions before we move on?
I think he had a question about renewables.
Yeah, would you like to maybe just ask that one more time? Apologies. Did you have a secondary question? Yeah.
The second question is regarding renewable energies. Now in MENA region, we have only the great source is solar energy. And do you have any other kind of source that we are near future we are expecting in this region?
So, Keith, do you feel comfortable talking about any other sources of renewable energy here in this part of the world?
Yes. I mean, solar is obviously, with all the sunshine and so on, solar is the obvious renewable energy to be using here. There are some wind. Wind is being tried here. It's early days. I'm not sure, and we don't know yet whether wind will be a viable form of renewable energy in this region, because obviously it depends on the local climatic conditions. I mean, the government here has also invested in nuclear, which is not strictly a renewable energy, but it is a zero carbon energy, so it doesn't contribute to greenhouse gas emissions. It generally evokes a lot of emotions, but we have nuclear here. I personally believe that without nuclear, given that we as humans are consuming more and more energy, and I don't see that changing, the only answer to getting to net zero that we currently have that's technically viable is nuclear. So that's, I'm really happy to see that the UAE has chosen to invest in that as well. I mean, that's a big step for the country, but also a big testament to the importance that nuclear needs to play in getting us to net zero.
Thank you. Any more questions before we draw this to a close? Is there anyone? Okay, well, that leaves me to say thank you very much for our panelists today. Really interesting discussion. So, Charles Tangawara, Head of Business Process at ESG, with ESG and Sustainability at BDO Dubai. Thank you so much for your time and your contributions today, Charles. It's been a pleasure. And Joanna Pideaux, Sustainable Finance Director, Sustainability Excellence. Thank you as well for your time.
Thank you.
And Keith Bradley, thank you again for your time and your contributions today. And Shireen, of course, lovely to have you with us for the presentation and, of course, the panel discussion. I think it was a very insightful conversation, so thank you, audience, as well, for your attention and the questions, of course. So thank you very much. We can go.
Thank you, Charles, Joanna, Keith, Shireen, and our wonderful moderator, Natalie. One more round of applause for the panel, please. So there was a mention about banks playing a role in ESG and sustainable finance. So maybe I thought I should make a long presentation on what National Bank of Fujairah is doing in this space. I see a look of horror in everybody's face, so I'll not do that. So I'll just encourage maybe to just look at our website, the sustainability section, look at the ESG report, the ESG position statement on what NBF is doing in this. We also have the NBF run for those who are health conscious and are looking to contribute to their own physical fitness. The NBF run, you can check the website and register for the NBF run in November in Fujairah. It's going to be in Fujairah. There's an exciting 11-kilometer trail run, which I'll be participating, so hope to see you in that. Yeah, so with this, my job remains, I am the only one standing between the food for thought and delicious food outside waiting for you. So my job is to thank all our wonderful panelists, all our wonderful partners, Refinitiv, Fujairah Environment Authority, Emirates Nature, Living Business, and Sustainability Excellence. One round of applause for our partners, please. And finally, to thank all of you who have taken your time off this morning and spent time with us. So thank you to all of us.